Hi, welcome to this video day, which is on May the 5th. It's Saturday. Going to be looking at some trading techniques that anyone can use to help you get high odds entries into big trends. When I say big trends, I mean 300 pips, 500 pips or more. And the two pairs we're going to be looking at today in relation to this, and go to the charts in a moment, are Euro USD and USD NOK. Now, in terms of the techniques that we use, going to be using simple technical analysis focused on the really big support and resistance levels. And basically, to find them, we're going to be using our favourite tool in Forex trading. It's a very underrated tool. It's the COT, the Commitment of Traders report. It's so effective because it will help you spot high odds entries on the charts, which you just won't see from the technicals alone. And just as important, the COT will help you project how far a move might go. You can't say, a pair is going to go 300, 500 pips or more just by looking at the chart. You need to know the power of the buying and selling behind the chart to do that. And that's why the COT is so effective. Now we're going to go and look at the charts. Keep in mind, it's my view as of right now, it can change in line with the market conditions. If you want to see our daily technical analysis of 14 major pairs, learn all our trading techniques, and also see our COT analysis as well, you can get live access to our member center on the link beneath this video. Now, in terms of COT, I've loaded a video beneath this one so you can learn more about it. If you just want to watch the video through right now, all you need to do is keep in mind that what we want to do is we're always looking to trade with what we call the smart money, the commercial hedgers. When they move their positions aggressively against large speculators, that will become clear when we go to the charts, and we're going to do that now. And we're going to start with Euro USD and look at the Commitment of Traders data first.
Just look at the COT net traders data before we draw some levels of entry, stop and target. Now, in terms of, for new viewers, commercials in red, smart money hedgers, large speculators in green. Now, in terms of previous videos, we've been watching this obviously for a few weeks as a setup. Now, noted an arrow A here. You can see speculators build up their longs, okay? Commercials drop short against them. This is a record historical net long position held by speculators. Push the euro up into this A level, you get double top, we come down, okay? Speculators drop off their positions, and here they can have another go. They don't quite reach a record, but it's very, very close. They drive the euro up into B. If you notice though, the two peaks there don't come close, or they come close, but don't take out the double top there. We then drop down. Speculators again drop their positions down a bit. Then they come up for C. This was a significant one for us because C is another record net long position. Look at that. They can't drive it up at all very far. And these highs here, long way away from these ones here and those ones there. And as expected, the euro fell. Now, this for us is mostly speculators exiting the market. You can see they've dropped down, okay? Commercials have naturally covered a few hedges this week, but these positions are still elevated, okay? There's more speculators to be taken out on stop, and I personally think you're going to get minor rallies, but I think this could now become a good downtrend. There's still plenty of specs to get flushed out on stop. Euro for us is going down. Let's go and look at some levels of entry, stop and target. On the chart of Euro USD, I'm just going to draw my levels in a moment, but just very quickly, just going to go through the Euro fundamentals, but bullish fundamentals and then more specs to exit. Well, you don't need to know the fundamentals necessarily. You can trust the COT. The commercials know when a currency is overshot to the upside or downside, but we like to know the fundamentals. We think the commercials we're seeing gives us more confidence in our positions. Just very quickly, I want to go through them. obviously got the speculators, they bought on a September end of stimulus and December rate hike, okay? No chance of that happening in our view with the way things are looking. Overall inflation, it fell to 1.2% in the year to April, below forecasts of 1.3%. Core inflation, okay, the really important number in our view, was just 1% year on year. That's half the ECB's target, okay? And even worse, and he didn't see much of a fuss made about this in the media, but last week, core inflation for April came in at just 0.7%. That's the lowest since March 2017. Now, the ECB have said inflation is the key to them raising rates or rolling back stimulus. It's nowhere near, is it? Okay, it's not going to improve that dramatically by September in our view. Also, a lot of people in the media say, well, yeah, the economy's doing well, okay, inflation's going to pick up. They're looking at different data to me. Eurozone economy grew at 0.4% in the first quarter. That's compared to 0.7% in the previous 3 quarters. I saw someone say in the media, it was from a bank, it said it was due to cold weather. You've got a 0.3% drop on cold weather? I don't think so. Unemployment was flat 8.5%. That's double the US. Unemployment isn't coming down. And the worst thing for the zone is if Germany starts to slow up. And Germany is slowing up dramatically. It's the major economy of the zone. It's growing at its slowest rate in 19 months. You can look at anything in Germany you want at the moment, industrial production, construction, PMIs, exports, the data's falling. I'm half German myself. When I talk to my family, they're not exactly bullish about Germany at the moment, okay? Now, just finally, Mario Draghi's dilemma. Now, for me, Mario Draghi, he's the smartest central banker around, and he's doing a really good job in Eurozone, but he is under such constraints. And his worry, and it has been for a long time if you go and look at when he speaks, is the structure of the zone. He's saying it's very hard for the zone to really move forward unless all countries in the zone have the same structure. What he means by that is, for example, you've got very different labour laws in France to Germany. It's not an economic union, it's a monetary union, and that's the big problem in Eurozone. It's Mario Draghi's dilemma. He says, he said on numerous occasions, the ECB will do their best, but it's up to governments to really sort out the zone. He's right, okay? I've done the analogy of cooking. And I think it's a good one. I can't remember who did it, but basically what he was saying, the guy, was that in Eurozone, you've got one interest rate for everyone, all those different countries. And it's a bit like, if you raise rates, it's a bit like cooking a meal, but you've only got one heat. So you've got meat, which is Germany, potatoes, which is, let's say, France and the Netherlands, and the vegetables will be, let's say, Spain, Italy, and Greece. You turn up the heat, you keep cooking, you obliterate the vegetables, you obliterate the potatoes, and only the meat's going to come out well. Because countries like Italy cannot take even a reduction in stimulus, let alone a rate hike. Germany possibly can at the moment, but the way things are looking in Germany, that might go out the window. I'll put California. Why is California significant? What happened this week in terms of Californian data? If you took it on its own as a country, it'd be the 5th largest economy in the world. Okay. Now, California, to all intents and purposes, is pretty booming. Okay. Now, let's take another state in America. The poorest state, Mississippi. America is on an interest rate hiking path. Because it's an economic union, Mississippi will not collapse, okay? In Eurozone, you'd have the collapse of a country. I hope I've made that sort of easy to understand, but it's a massive problem. But in terms of the chart, right, let's go to the chart. There's your A peak up here. where we got up to 125, come down. Specs have another go above 124, can't do it. Here's the last laboured rise with the specs just running out of buying power in the 124. Okay, saying in our video at the time, just sell weakness. We came in at 123.50, and we were looking for a test of the bottom of the channel, which is 122, and we wanted to add another position in. So we added in at 121.70. Okay, so far so good. Yeah, near enough. 170 pips on the first position, and the second is 350. Now, is there more weakness to come? My own view is yes. I haven't drawn that line quite straight. We get the idea. It's supposed to be through 122. You got this candle here on Friday. New low. No more sellers for the time being. A little bit of a rally, but we finished pretty weak. Okay. Do I think the euro is going to rally? I personally think, she's got a little bit oversold. Where could she rally to? I think that is a good level to look at. What you've got here is that's this double top here, decisively taken out by that big blue. It's the bottom of that red there. Just near the top of that red there. It's about 120.80, isn't it? Now, if I draw a trajectory line, if I can get my mouse to work, okay, you kind of got a double trend line resistance there. So if she comes up, then you can look for weakness. You can do what I call a round number play. If she comes up this line or this line, just sell her back through 120. Just go through the round number. They're always good to go through. Or use your judgment. I can't say what it's exactly going to do at the moment. This level here, 121, in my view, is going to be hard to take out. Okay? So, if we get above 121, I'd certainly just sell it back through 121. So, from our point of view, I know I stress this a lot, we're always in favour of running two positions. Obviously, at the moment, we've got a nice profit, but, that can be diluted with a rally. It could be a trend change. The euro's been pretty stubborn in the past. I don't think it's going to turn into an uptrend, but you never know. Okay, you always take one position out. So always run two positions, then you've got the opportunity to get some profit off the board and reduce your exposure. Now, what if she doesn't rally up? Maybe through that double bottom there? I wouldn't bother with the tail, I'd just sell it through the double bottom. Where could she go to? Well, my first target is here. 116. Okay? It's a good weekly level as well. I did pose a question here. What level did speculators create elevated longs on stimulus reduction in September and rate hikes by December? It wasn't 116, was it? It was between 112 and 114. So we've got 116 and 114 as the next level down. So for me, this looks like it could turn in to a really nice downtrend. It's looking, good so far. I didn't mention, the US fundamentals. Obviously, I just don't think they're getting any worse. NFP was okay, inflation data okay. I think, the Fed are going to continue with that gradual path of increasing rates. Okay, and I cannot see the interest rate differential moving in favour of the euro anytime soon. I just don't see stimulus being reduced or rate hikes coming. Stranger things have happened, I suppose, but just don't see it coming. So euro going well so far. We'll see, obviously, how it progresses on a daily basis. Now I want to go and look at USD NOK, which is actually one of my favourite positions at the moment, and I think it looks a fantastic opportunity. Right, let's go to USD. On USD NOK, and I'm just going to draw some levels in a moment. I just want to go through the sentiment towards this pair. Now, in terms of a typical view, I've done it from a bank here. They say, fundamentally, we still see an appealing case for why the NOK should strengthen over the coming year. It comes from Danske Bank, but any bank research you read, but I haven't seen one that is bearish of the NOK. So why is there such an appealing case? Well, they think the Norges Bank might hike rates in the next few months. Now, traders already bought on that. They bought in anticipation of the rate hike. It's by no means guaranteed. And now, there's no COT data for this pair, but if you look at bank data, positions of speculators, not just against the USD, speculators are a bullish extreme in the NOK in terms of their view. Now, will the Norges Bank raise rates? Well, they might, but they'll probably only do one hike at best. It's discounted. I have a big chance they won't do a rate hike at all. Obviously, Norway is a euro proxy, currency. So if the euro goes down, hard, that's going to pressure the NOK even more, and of course, Norway very exposed, obviously, to Europe. But I think a major factor for us is this: Europe's biggest oil exporter is Norway. It's received no support from recent oil strength. Oil has been surging. We noted it in our previous video on the NOK. When we were down here, oil was already surging or very firm, and the NOK is not getting stronger on the USD. And oil has continued to move up, but look at the NOK. The USD has pushed it down. Now, what if oil were to break to the downside? I must admit, I thought oil would have broken down a little while ago. We've got a record net long speculative position in there, and all that's holding it up is those Iran sanctions, the Trump view towards them, which I'm not going to explain in this video. It's going to make no real difference. Traders bought an anticipation of that anyway. So I think oil could be due a massive break to the downside. That will hurt the NOK if it doesn't break down. USD's doing okay. Anyway, what about risk off, trade wars, etc.? Bound to hurt the NOK. USD will firm. If we look at interest rate hikes going forward, market seeing one from the Norges Bank in the next few months. We know we're going to get a few from the Fed this year, more than the Norges Bank are going to do. So, with that speculative extreme long the NOK, I think the dollar's going higher. Now, our original position was just put in here, and we always love it when volatility drops down like this. If you're bullish of the USD, you want to come in long. You'll basically come in long on strength. We did it through the 20-day moving average, one of our favourite ways of getting into positions, and it's been pretty good. And this is a fast moving pair, far more money trading USD NOK long with a smaller position than we've got short Euro USD. So trend for us now is in motion, and where would you want to get into it? Where are the key levels? As a sport level, I like this level here. Why? Let me just draw it in. Because you got red there, and then a big red that really plunges down. You got two big blues crossing here as well, and you got a round number 8. So this for me should be support. Where's resistance? Well, got that double top there. I wouldn't, if I was coming in fresh, because I'm so kind of bullish of the USD. Sorry, I'm trying to draw a trajectory line. It won't quite come for me. There we go. I would just go through clearance of the 810 level. Stop back behind this level. We've done it behind these two candle bodies and tail that you can see. If I can draw my line straight, there we go. So that tail where she pushes up, bodies hold, and then that one pushes off. So I think that's pretty good support. Now, in terms of, I've got two targets on this pair. You can only see one of them on this chart. 840. So through here, up to 840, you've got just under 3 to 1 in terms of risk reward if you're a dollar bull. But my own view is, if you go and look at the weekly chart, strong case, longer term, the euro, not the euro, sorry, the USD could go to 880, So, obviously if it got up there, that would be a fantastic risk to reward trade. And, for me, these minor Europeans are great because they move, they're volatile, you get good trends. Okay, you pay a little bit more on the pip spread, but yeah, if you're looking longer term, you soon cover that. I've got it as one of my long-term position trades at the moment. I personally think it looks really good at this moment in time. We shall see how it pans out, but yeah, so far so good. That is the video for today. Thank you very much for watching me as per usual. Take care and have a good day.